You're always going to spend your dollars before you spend your Bitcoin, unless there's like an absolute reason that you need to spend your Bitcoin. It's like, oh, that merchant only takes Bitcoin, or oh, this is in, Kuala Lumpur, like some crazy place that I can't get dollar sort of access to. You always sort of send the dollars before you send the crypto, because your expectation values. As Gresham would refer to a superior currency and an inferior currency, being one that will potentially lose its value in the future and one that won't. In that situation, what we've always seen happen is that the inferior currency circulates and the superior currency is hoarded. And we can see that same characteristic in Bitcoin.
This is a corded cashmere.
It's stunning. First of all, Carl, nice sweater.
Thank you very much.
Second of all, thanks for coming into the room. You and I were just having a super interesting conversation out in the conference area, and we thought we'd bring it in here, discuss it, record it, because it's super fascinating and covers a lot of key and interesting points about the crypto space. We were discussing Bitcoin, kind of where, well, in some respects, where this started. Obviously, crypto goes back before that, but where the cryptocurrency space really took off, and is it successful? And how you define that depends on what you think its purpose is qualitatively, what you think the metrics are quantitatively, and you get into all these interesting design choices, decisions, where it may succeed, where it may fail, and what we can do better. And you and I have different perspectives about kind of all these things. So I think that's what we're going to talk about. Anything else you wanted to cover here?
No, I think you got it. Just to sort of give clarity to the viewpoints, I think David thinks it has succeeded more than I have, and I think that it has some shortcomings that we need to address.
Yeah, totally. Maybe I'll start with like the blind optimist view, if you will. I think Bitcoin's a raging success. I think that by any metric, almost, it does have some areas to improve, no doubt about that. But first and foremost, as a money, right? What is the monetary base, like $1.25 trillion these days, something like that? What does that put it on, like number 13 on the list of like national currency monetary bases, like just ahead of, it's ahead of like the Mexican peso and the Swiss franc, and just behind like the Taiwanese and Hong Kong dollars and the Brazilian real. So, I mean, that's pretty impressive over the course of 10 years to come out of quote unquote nowhere and achieve that. Furthermore, that's money. As a transactional mechanism, I think it's like 500,000 transactions per day, something like that, which puts it on par with FedWire, and something like $5 to $10 billion transacted per day, something like that. These are rough numbers, I'm guessing here. And so from my perspective, right, depends, again, what you think the extent of it should be. I think it's a raging success. I view it as a monetary system, a monetary base, and a settlement platform. I think that cash, when you talk about peer-to-peer electronic cash in the white paper, gets interpreted differently by different people. And from my perspective, looking back on the old crypto punk days, cash means bearer instrument. It doesn't necessarily, in my viewpoint, mean it has to be every payment for every commercial transaction across the globe. And furthermore, it's kind of more scalable than cash in that you don't have to be physically together to transact it. But yes, of course, a lot of the conversation goes around scalability in the electronic era, reaching Visa and above type transactions per second, bandwidth throughput, and then one that I absolutely agree with, privacy is a big issue there as well, but that's for another day. But just from a transactional means as a money and as a transactional payment settlement mechanism, I think it's a raging success. And that's like where I come from.
Yeah, so I mean, my perspective, the thing that it was trying to do is it was trying to create a credibly neutral money system, independent of nation states, set up game theoretic outcomes that sort of make it a protocol that everybody can participate in and no one can really manipulate to their advantage. That was kind of the point. Now, does that manifest as a monetary base? Does that manifest as cash? I guess as I look at it, if you only think about it as a monetary base, it takes on characteristics that prevent it from maintaining that uncontrolled, decentralized nature, and that for it to, in the long term, be even an independent store of value, it also needs to be able to function as an independent medium of exchange and unit of account. So what I've seen over the years, and right when I first got into sort of interested in Bitcoin and in the crypto space, I thought it was a great idea. This like objective system to coordinate globally in an objective way with rules that can't be changed or manipulated. That was like just so attractive as a cooperative system, because all the previous systems we have, are trust-based systems, and they're politically built and they're socially constructed. So through politics, like, you can manipulate and change the rules to the advantage without necessarily the agreement of the participants, whereas proof of work as a mechanism to create digital scarcity offered sort of these immutable sets of rules, monetary policy, so on and so forth. Now, over the years, what I've seen, though, is that if you don't have those other two characteristics, i.e. the medium of exchange and unit of account, especially in a work-based system, you lose some of these decentralized properties. And, one potentially that even in the Bitcoin community is now more talked about is sort of the security budget, and how the transaction fees need to come up as the inflationary fees drop, so that we can maintain security. Because the whole point of Bitcoin is that, or just any proof of work system, is that you don't get finality in blocks. You get finality in the fact that it's expensive to go back and create a ledger of similar worked depth, right? So every block is essentially a commitment of money, and that commitment of money makes it so that transfers of money won't get reversed, because it's an economic finalization process. So if you want to send, and this departs a little bit from a lot of people's perception of like finalizing a transaction in Bitcoin, right? So many people will say 3 blocks or 6 blocks is a finalized transaction, but if a Bitcoin transaction only is worth $200,000, if we only go 6 blocks deep, that's really only finalized a transaction that's $1.2 million, because if it's more than that and somebody can attack that transaction to gain more than $1.2 million, they are economically incentivized to sort of do a double spend attack through mining a private chain. So all sort of guarantees are economic finalization guarantees through the expense of creating this expensive and eventually economically permissibly mutable ledger, right? And so then the problem becomes, as our inflation subsidies go down, if we want to have a sustainable system, we need to offset those with fees. But if we look at Bitcoin's model at 5 CPS, you're potentially going to need fees of $1,000 a transaction to even come close to maintaining the transaction sort of ability that we have now with this current size of monetary base, let alone going 10x or 100x this monetary base. And so that's one of the fundamental things that I think limits Bitcoin, is that there's no answer to this question of how do we sort of supplant the inflationary rewards with fee-based rewards if we're stuck at 5 TPS.
Yeah, and I think those are two areas where you and I probably agree more than we disagree in terms of like the purpose and viewpoint of what a blockchain is, right? Around its purpose being ordering, and its like finality being probabilistic and economic based. But where I think we disagree, right, is in like some of the philosophical underpinnings of what it should encompass, the Bitcoin system itself, whether it should be money, a settlement system, a payment mechanism, and so on.
Well, just to summarize, I don't see a solution wherein you have a system that's not all three of those things. I don't think that you can create a sustainable economic work-based system without simultaneously being a store of value, a medium of exchange, and a unit of account. So I just think about it from an economic perspective, but we still have inflationary mining rewards. And we don't have like, a ubiquitous monetary base, right? It's the like 10th biggest currency. It's not the first biggest currency. So if that goes up 10x or 100x, like where does that leave us? I mean, do we even have a system that has finality anymore for that type of transaction size? Yeah. And then as that inflationary reward keeps dropping, how do we make up for it?
Right. Yeah, I mean, if I compare, though, my perspective of looking what exists today and what exists previous to Bitcoin versus like the utopian or idealistic view of what it could be, today we have those different layers in the monetary system. You have commodities, national currencies, Fedwire and settlement systems, layers of payment mechanisms based on credit, based on push or bearer instruments, and we have all these different layers both horizontally and vertically today. Now, the problem is in every single one of those, we have like deep intermediation by and large.
Yeah, that's right.
Even in the gold market, where you see LIBOR in the London markets having a disproportionate impact there as well. So even in something like a natural commodity like gold, which has many of the properties that Bitcoin does, it's intermediated in many ways. And so when I look at what exists today in the existing financial infrastructure and the prior attempts towards Bitcoin, you're talking about like Nick Szabo's BitGold and Wei Dai's Bcash and Liberty Reserve and so on and so forth. I mean, Bitcoin didn't just fall out of a coconut tree, as Kamala would say. It came from these other things, and it was fixing this problem where they could not solve this intermediation problem. And so from that perspective, just that, the reasons why the precursors to Bitcoin failed and how the existing monetary system at every level of the stack, that challenge of intermediation, Bitcoin has achieved that. Now, maybe not at the scale we would like it to, all the way to the end user and super like total bandwidth anyone can transact on chain in a fungible way, but it has solved that core challenge that both its predecessors and all alternatives in the existing monetary and financial system face. And so that's where I'm coming from. It's a raging success. But you're right that there's challenges because that is only as good as it being able to be used in these other layers, whether it's part of the same layer or otherwise. And so I think we do agree that it faces real challenges going forward. But so far it's been successful. A lot of the debate is almost very forward-looking, right? Like when the block subsidy runs out and whatever it is, 2140.
Maybe. So
it's is it? Yeah, that's a good question.
No, I mean,
are we facing those problems today?
It's interesting, right? You brought up gold.
Yeah.
And gold, I think of as the original proof of work asset. Because basically the reason gold worked is because supernovas sort of evenly distributed it through the crust of our Earth. So no matter where you are, you have to expend
great entropy, yeah.
about the same amount of energy to go dig it up and refine it. So then it's not sort of naturally abundant in concentration anywhere. Humans had to go and figure out how to get it, and they had to expend roughly the same amount of energy to do it. So it's kind of the Neanderthal version of Bitcoin, right? Because it's a proof of work quantity. It's objectively verifiable. So I can show you a gold coin. You can verify that it's a gold coin, right? I can divide it and I can trade it, and it's durable. Now, the difference here being it's not digital, right, would be sort of the primary differentiation. But, I think what's happening to Bitcoin is the same thing that happened to gold. And if you actually looked at the U.S. monetary system, in the 1800s, 40 years before the Civil War, we operated entirely on bimetallic standards, so gold and silver coins. And it was like a boon time for the United States. It was only with the introduction of the Civil War and greenbacks that were used to fund the war that we reintroduced fiat-based currencies. And that lesson is actually very interesting. And the thing that I think about in that lesson is that what ends up happening is once you introduce sort of a fiat-based currency, a note-based currency, if it's fractionally reserved by gold or if it's just fiat as we know it today, the problem is you have two different currencies in the market. You have as Gresham would refer to, a superior currency and an inferior currency, specifically being one that will potentially lose its value in the future and one that won't. And so in that situation, what we've always seen happen is that the inferior currency circulates and the superior currency is hoarded. And we can see that same characteristic in Bitcoin, right? If you have dollars and you have Bitcoin, what do you spend? Mm-hmm. You're always going to spend your dollars before you spend your Bitcoin, unless there's an absolute reason that you need to spend your Bitcoin. It's that merchant only takes Bitcoin, or this is in, Kuala Lumpur, some crazy place that I can't get dollar sort of access to. And then okay, I'll send crypto. But you always sort of send the dollars before you send the crypto because your expectation values.
I think you and I differ as well on some of the political economy theories behind here. The opposite of Gresham's law, as you would say, is Tyr's law, which says the exact opposite would happen, that instead of bad money pushing out good money would push out bad. And I would say that Gresham's law, in terms of like a harder, better currency or money, I should say, being pushed out by bad money, was by and large a product of having very local economies that were not global, that were entirely controlled by and large by a crown or like within some sort of regions, and not in a digital way. So I'm not convinced that Gresham's law holds today as much as maybe it did back then. And furthermore, I think that there's a difference between fiat at the fundamental value of money versus the representation of money. And you just, made that same point that, hey, what gives it its value? Is it backed by gold versus how is it represented, paper or actual gold? And when I look at the breaks in our monetary system from a macro perspective, we used to use straight gold bullion, like actual gold. And then we moved to, both bimetal, and a lot of that bimetallism broke because of the Industrial Revolution and us striking gold or silver in parts of California and Australia and otherwise that totally created an inflationary environment with one or the other. But the point that I'm making is that people started to coin specie out of these metals and then inflate it because they'd put other non-precious metals into that, or they'd say the exchange between the underlying and the specie was different. And that's when you had that break. So my viewpoint, it's not just like the bimetallism, but it's also the move from pure direct bullion to coinage. And I think you're seeing that today, where we have the move from a gold standard to just straight fiat up and down the stack, a credit-based money, both in a representative way and what it's backed by. And so from my perspective, you had the mercantile age based on bullion. You had a break with both bimetallism, but more importantly, coinage or specie that failed due to inflation and by and large funding wars, as you said. And then you had this great industrial revolution, gold-backed, currencies and gold standards. And then you have fiat, and that's the next break in our system. And then you'll have cryptocurrency in the information age going forward. So I think similarly to Bitcoin, we share a lot of the same viewpoints around the political economy and macro perspectives, but I think we differ in a couple of the areas about, does a money need to be one money that's hard all up and down the stack, used for both collateral and value and medium of exchange? I'm not sure that it does.
Well, it's interesting you talk about the issues of bimetallism. The issues that David's referring to, I believe, are the facts that in the bimetallic standard, there was face value, and you had face value of silver, and you had face value of gold. And so then the problem was, depending on the supply sort of change, and therefore the price change in the underlying assets, the face values didn't necessarily represent. So if sort of the gold supply increased, the silver didn't change, so then sort of its intrinsic value was more than its face relative to gold, so then people would sort of hoard the silver out and want to spend the gold, or vice versa.
Right. Those exchange ratios were set by
the supply. Well, yeah,
the supply
so it was conflicted, right?
Right.
So
it
was a conflicted problem, right? So it was like a face value problem versus an intrinsic value problem. And in some ways, you're actually elucidating issues of having two forms of money, is the issues that happened with the bimetallic standards. So maybe let's subordinate that issue and just say, we had gold, and if gold was the only sort of circulating asset, what would that look like? I think the fundamental problem is, once you get into intermediation, you always have enterprising parties figuring out how to take advantage of the position of intermediation. So specifically with gold, what ended up happening is it had this issue of sort of divisibility. It had this issue of how do you store it. It had this issue of how do you transport it, and then how do you use it in trade, because you can represent a certain value of things in gold, but having a lot of gold in a lot of trade makes it harder and more expensive to use, for those settlement mechanisms, right? Even with the high prices these days, if you want to have $1 million in gold, I think it's about 40 pounds.
Yeah.
And as a human, even a big human, the most you can actually carry is about 80. So you can carry about $2 million worth, and then you can hypothetically store this, but then how do you store it? Are you going to ever go on vacation? Are you going to lock this in a safe? Are you going to bury it in a hole? Are you going to put it in a safety deposit box so they can sign another executive order and take it from you? right? So there's like a lot of issues just surrounding sort of the transport, the use, and the exchange. So what ended up happening, because it had issues, is we created the hypothecated notes, right? So the whole idea was you had gold, so I can't store it easily, so then I go to the goldsmith or the banker, and they like throw it in their safe. Originally, this was a goldsmith, right? But then what the goldsmith found is then people started trading the notes of the goldsmith rather than coming back and getting their gold to do trade. And then he was like, no one's ever going to come redeem all these notes at once, so I can just make a few extra. Nobody's going to notice. And then we sort of invented fractional reserve banking, and like this concept of taking risk because you have capital and not paying the capital holders back and then making money off of the risk that you're taking with their capital is like the banking system, right? It's the whole thing. And then it just gets more and more extreme. It's like, okay, are you partially reserved? Are you 90% reserved? No, we're not 90. We're 80. Oh, we're not 80. Oh, we're 10. Oh, 2008 happened. We're 0% reserved now. So it's just all fake money, right? And so the problem is once you introduce intermediation, like as humans, we've always seen that those trusted intermediated parties are always, without fail, I don't think you can give a counterexample, not going to take advantage of that system by either fractionally reserving it or charging like crazy rates or like, I don't know. But they'll do something to sort of screw it up and steal value from the value producers as the intermediaries.
Yeah, so I think we share that opinion of human nature and systems generally. I would say my counter to that would be verifiability. The two areas where gold, as you just mentioned, rightly mentioned, fell down here due to intermediation was around verifiability in terms of assaying the gold and verifiability in terms of the storage or stock of gold that a counterparty might have.
I think assaying is a little less problematic, but it's more about... No, I think the bigger issue, right, we see within the LBMA, the London...
To be clear, assaying is like when you determine that this thing is some amount of gold or like pure
purity,
gold or like, right? That's what we're talking about, right?
Yeah, so it's ascertaining it. I think the more important part is something like if we look at the LBMA, the London Bullions and Metal Association, they basically operate the gold market.
Right.
And the more pernicious problem isn't the assaying piece, it's the allocation piece. So there are credible arguments to say that there is 100 times more paper gold in the world than there is gold to back it up. And the way that they do this is they have what we call allocated accounts and unallocated accounts. In an allocated account, they'll say, okay, this gold bar has this serial number and this serial number belongs to this person, right? So it's strictly allocated, but they have a vast use of unallocated gold, which means we have this generalized pile of gold that is meant to be responsible for these generalized set of obligations against these generalized set of accounts. And when they do that, there's not a one-to-one auditability and tracing that takes place going from, do I have the gold that I have to satisfy my obligations, which again just gets us into a fractional reserve setting. And there's a lot of arguments that the reason that the gold price hasn't gone far faster than it has is because of the gold ETFs and how they are creating gold paper using unallocated accounts and effectively fractionally reserving physical gold with hypothecated gold notes. And if we come back to this conversation about Bitcoin, they figured out how to do it with a very similar asset, gold, with very similar properties. And then once they got hands to intermediate it, they like destroyed the properties, which is scarcity and sort of guarantee that it's there and durability and all of these problems. And I fear, in this very apropos time that we've recently seen the Bitcoin ETFs be approved, that they will end up creating a similar construction. Now, to play devil's advocate on your side, Bitcoin is a lot more auditable.
Yeah.
In that, right, you can do a proving process to more easily say, like, this is how much I have.
Right.
Gold actually has that same property because you can go into a safe and you can be like,
physically, right.
Look, I got 12 tons of gold here.
Say it, that it's
and it's relatively, with X-ray fluorescent spectroscopy, like you can easily assay it and and you can ascertain you have 12 tons of gold. The harder part is figuring out what your obligation side of the book is. So even if we like envision an ETF, right, and they can come in and sign a signature that says I have 200,000 Bitcoin, that's not the hard part. The hard part is figuring out the obligation side.
Yes,
and they're going to figure out how to cook the books in the exact same way.
Maybe. I will say that I do think that I think the ETFs pose a different risk than like a fractional reserve or like paper, whatever. It's more like the Wall Streetification of Bitcoin, and nobody's actually using Bitcoin directly or in like a peer-to-peer way. Instead, they're all reverting to these like paper mechanisms and then ceding potential control or at least influence over the system to those intermediaries over there. But I think this is a good jumping off point to like bring it to the modern day, and like how would Bitcoin work on these points versus a system that you would envision in your mind working. So the Bitcoin point that we're talking about here about verifiability and auditability, that allows you, using simple computer code, obviously, like unless you know what that computer code says, you're maybe relying on someone else, but that's true of everything. You can figure out whether the Bitcoin is authentic, is real, is valid according to the protocol. And the concept of Bitcoin banks that Satoshi and others used to talk about in the Bitcoin Talk forum days, about how you might have basically automated banks that anyone could both prove the Bitcoin was real and how much Bitcoin they had. And you mentioned that, right? Like Bitcoin has those properties of verifiability and auditability, much more so than gold, in that like you don't have to be physically proximate to it. You don't need like a chemistry set, etc. But on the obligation side, right? Yeah, that's still
the whole problem.
Something else. But if we can automate more of those systems via atomic swaps or other contracts or credit-based mechanisms, that's kind of the future that I see of Bitcoin. Bitcoin serving as sound money and the ultimate collateral mechanism for other systems that can, in a trust-minimized way, connect to it. So that's like the viewpoint of like Bitcoin is valuable. Yes, maybe it won't serve. Everyone won't use the Bitcoin main chain to buy a cup of coffee, but it will serve as like the fundamental money store of value and ultimate collateral to connect into more trustless or trust minimized systems that do this.
Okay.
So what's your response to like that view, and then parlay that into like an alternative version of a system that you would envision be different than Bitcoin, but achieve the properties you're looking to in a way that Bitcoin doesn't?
Yeah, okay. So fundamentally, the issue here is that Bitcoin had an objective system, and it had an objective system that has verifiability against it. Mm-hmm. And the problem is, every time I say obligation, I'm talking about a debt or I'm talking about credit. So if we need to have debts and credits to operate the system, those debts and credits do not have objective verifiability. Like, that is the fundamental problem. They have a million different ways that can be represented. There's no sort of system like Bitcoin that allows us to verify them. So once we move away from an objective system into sort of this arbitrary subjective system that can have 100 different manifestations, like we've moved away from the properties of Bitcoin, right? And like that's the fundamental problem. Like once you break that link through a trusted custodianship, i.e. somebody that has an obligation to you to redeem something, like you've lost everything. Like you haven't lost a little bit, you've lost everything. And that's my perspective on it, because what people have shown again and again is that given the opportunity to sort of take advantage of the money system, they will. Mm-hmm. And that's what I think is going to happen with Bitcoin if we say that we're going to have this multi-tiered approach where Bitcoin is a monetary asset like gold, and we use effectively banks again to create notes or digital representation of notes in which we do exchange. We're going to end up in a system where they take outsized risks with our money. They don't pay us back for it. They're going to arbitrarily inflate supply and manipulate markets to their advantage. And we're going to see everything that we are trying to remove come back into the system if we can't transactionally use Bitcoin. As a money system to preserve the properties of money, like it has to be used that way. Like it can't be used with a trusted intermediary. So the system that I envision is a system that's like Bitcoin, and that it has this decentralized, economically achieved consensus and digital scarcity, but it can scale to function both as a medium of exchange and a unit of account, so that we only ever have to think about going into trusted intermediaries if we want to explicitly take on credit or debts. We don't have to just to have it function as a monetary system. And that is like what I see you must have to, one, get economic long-term sustainability in a work-based system, but two, just preserve the decentralized attributes that like Bitcoin originally had. If we like let these ETFs run out and they sort of recreate the LBMA situation with Bitcoin, which they did with gold, we're going to end up in the exact same situation. And that doesn't even go down the other thing you hinted at, which is, will they have outsized control of the protocol, which they are already put into place. Every one of those ETFs has explicitly said that the issuer has the sole right to determine what the true Bitcoin is. And they also said that they have no obligation to give you a fork if they decide one thing over the other. So let's just run a hypothesis here. Larry Fink loves ESG. BlackRock loves ESG. And there are very...
he's turning on that. I think they like money in business. It's turning.
Okay, maybe. But they've had a propensity to do things that were counter to their economic interests with regard to ESG initiatives. So maybe at some point, I disagree that Bitcoin is bad for the environment. I actually think it's good. I think it creates a responsive grid that allows the greater adoption of renewable energy because you can have more energy and balance it out with Bitcoin mining.
Yeah.
Fine, you can exploit stranded sort of resources, all these good things, right? But that being said, that doesn't mean that they don't want to control it. And the way that they control it is by moving it away from proof of work. So if suddenly the ETFs own half of the Bitcoin in the world and they say, we just got these core devs that were on our payroll maybe to, push this update to make Bitcoin more environmentally friendly and go from proof of work to proof of stake, I think they could succeed because in that fork, they'll give everybody the proof of stake thing. They'll effectively hijack the name, and then simultaneously they can dump the work coin at market. So then, where does that leave us? Now we're just into a system where the bankers have the ledger again, exactly like they do, and it's the mechanism by which they create a monetary base and issue money. So at that point, we've completely destroyed Bitcoin. But
that's a lot of hypotheticals. I mean, ESG. So first of all, they pursued ESG for economic gain because it was fashionable and they could get customers. And now that it's pendulum swinging against it, they're also dropping it quietly, shuffling it under the rug. But furthermore, how about this? Didn't UASF and the other fork wars in Bitcoin show that there is a resiliency in that capacity, in that blockchain, BlackRock, Fidelity, these other, ETF providers, they are simply holding an IOU, much like a bank. In fact, probably better than a bank in many cases. And so if their customers cared, they would just redeem those. And if it was mentioned that BlackRock was going to support some sort of protocol mechanism or advocacy or, activist sort of investor movements on Bitcoin, ultimately, people would vote with their feet and their money and redeem. The problem is that people won't care. The end users, I think, I think we kind of share the same risk. It's just, I don't think I view BlackRock and Fidelity as nefarious, maybe as you do. I view the malaise of the end users not caring about the Bitcoin protocol and just allowing them to they could just redeem.
There's actually precedence in law against this, right? So redemption isn't necessarily a tax-free event, and moving from one to another isn't necessarily a tax-free event. But the other problem that you suffer from is that, legally speaking, our very good lawmakers decided that BlackRock is able to vote your shares without regard for your opinion on the vote of those shares.
Well, that's not true. I mean...
No, it's absolutely true.
No, it's not true. You either give them a proxy or have a contract with them that allows them to do it. You cede control. There is no mechanism by which they have any control.
Can we bring this up?
No, I'm very familiar as a former corporate and securities attorney. It's all based on contract law. You're either just you get proxy statements in the mail, right? And so there's either that mechanism or the prospectus, which is the contract that governs your relationship with the ETF provider, says that.
Yeah, they get
right, but that's
voting shares.
Right, but you are voluntarily entering into a contract that gives them that right. They don't just take that right away from you that you had. So my point is, I think we agree on how it could be abused, yes, and most people don't care and won't even read that language, but it's not as if they're doing anything nefarious. They have a valid contract with the end user.
I'm not saying it's not valid. I'm not saying they're stealing it, but the thing is, right, when you go to sign up for an ETF, Like, you're not doing it because you want to cede the right to vote those shares.
That's right.
They have structured it in such the way that you are doing that, regardless if it's the prospectus or if it's legislation that gives them that right, they're doing it.
Yes.
Right. And what we really want is we just want a vehicle that allows us certain exposures that, is evenly distributed, that allows us to manage our risk profiles, but they're doing that one way or another. And because they are relatively monolithic providers, they all take that from us with that choice. So then our actual corporate control of companies as shareholders has already been pulled out from under us in every regard, right? So like how are we going to sort of maintain this in the Bitcoin space? Like, I don't think that they're suddenly going to give that sort of right back that they've already taken to say, oh, if you're an ETF holder, you'll get a vote on the outcome of a fork. Don't think that's going to happen.
That's true in any complex system. That's happening in our democracy, or has happened in many people's viewpoints, is when the end stakeholders or shareholders have a malaise or ignorance or just like not caring about these issues, then they're ceding control to other parties. That don't have their
I'm not even necessarily saying it's a malaise. That certainly exists. But even if you're active, it is still financially costly for you to be able to actuate that activism where it shouldn't be.
You're talking about like a tax event versus like a like-kind exchange in particular?
There's a lot. Those are some of the issues, right? And ETFs have certain treatments. And if I wanted to go and sort of make a basket of the S&P 500 as an individual and then rebalance it, I would have a difficult time doing that. I would need lots of money. I'd potentially need to set up my own trust.
That's what tax efficient ETFs are for,
right?
Yeah,
like so you have a ton of these issues. So it's not the fact that I want to cede my voting shares to Larry. It's that is all that is accessible to 98% of people, is that they must cede their voting shares to Larry if they want to just buy a Fortune 500 ETF.
Yeah, I mean, but that what I'm suggesting is they're making a choice to see it because the holders of the ETF don't care about these issues. Otherwise, they would own Bitcoin directly, which is not that hard these days. Not everywhere in the world, of course, but certainly in like the U.S. Like, obviously, there are structural reasons. Funds, RIAs, pensions, and different like institutions that have mandates that they maybe cannot hold Bitcoin directly. That's true, but they didn't care about the Bitcoin protocol to begin with. So the end users, I'm suggesting, that buy an ETF, they already don't care about these issues by and large, unless like you're the odd, crypto person who's like, well, I got this money in my 401k, I may as well deploy it, and I do care over here.
Well, let's dig into that. So you say it's not that hard for people to hold anymore. So there's two sort of issues with the hardness of holding it.
Yeah,
right. So one is sort of the issues around the UI UX of just having a wallet and a seed phrase and doing this in some secure fashion. If we're talking about self-custodianship, and then if we're not talking about self-custodianship, we're talking about having quote unquote real Bitcoin, but on an exchange like Coinbase, which means Coinbase just has an IOU to your Bitcoin. Now it's in a more explicit IOU than Larry's IOU. But again, not your keys, not your coins, right? So let's just like take the self-custodianship route, and let's say we figured out sort of how to do that, okay? You're still going to be hamstrung by how much the fees are, right? And I think, these days it's like $80 to move any Bitcoin. It can be more than that. And then high times, it could be 10 times that. So suddenly it's $1,000 to move Bitcoin. So, I can self-custodian it, but like now how often can I actually use it? And what does that do in terms of my willingness to be able to save in it, my willingness to be able to accumulate it, because I have this friction to spend it and I can only spend it taking $1,000 hit every time. And then to get over that, I'll say, well, okay, now I can't self-custodian it. So like, let's drop into Coinbase, because Coinbase is new, this cool thing, and it's going to create this like Coinbase channel like Zelle Pay for Chase. And if we both have Coinbase accounts, they're going to be free transactions because they're not actually Bitcoin transactions. They're just going to rejigger their internal ledger and be like, now you got a little bit more, I got a little bit less. But then what happens is we're completely subject again to Coinbase, one, keeping our stuff safe, not purposely fractionally reserving it, not censoring our transactions, right? And all these different things that we were trying to preserve. So just for the fact that, let's say I can overcome the UI UX, the transaction fees being high, we're pushing ourselves into Coinbase. And then again, like Coinbase is just the nouveau version of JP Morgan. And they're going to do all of the same things long-term that JP Morgan does. They're going to charge us fees for having their money there. They're going to figure out how to lend it at risk to sort of get revenue. And we're going to be like, sweet, we'll get like 2%. But like the actual risk-adjusted reward we should be getting is probably 12%, right? and then we're going to end up getting a bank failure. They're not going to pay for it. It's going to be haircuts to the people that are holding the asset. You're going to end up with the exact same problematic situation. So to fix it, I need to make it so that I can self-custodian, I can transact in it, and don't have the barriers that make me want to push it into a custodian if it's Coinbase or if it's BlackRock.
Yeah. What about this framing? So all the issues you're describing is true of everything. It's true of like capitalism, democracy, all these systems. I mean, look at how you pay today and your electronic and financial transactions that like have total like a surveillance state on them and like are actually 100% permissioned. You have to ask to get your money from banks. Like that all exists today, right? This isn't an issue with Bitcoin. This is an issue with the whole world. And so what I'm suggesting is, yes, we all need to fix these things. I think we agree, but the mechanism or the architecture or like what layer and how you go about it, I think is where we can bring this conversation into like modern times and solutioning. Whereas, I see a world potentially where Coinbase or banks, these Bitcoin banks that they used to talk about in the Bitcoin talk forums, that like, can we automate and make more trust minimized all of these service providers, intermediaries, and connections between systems? That's what we want to do. Now, the question is, how do you do that? And do you do it in a piecemeal, interoperable fashion? Or do you kind of start over from the ground up and have like a whole more holistic approach that I believe you're proposing? That's kind of my framing and understanding of our difference of opinion of approach here. Do you think that would be fair to say? Because we both agree on these issues, and I'm just suggesting maybe there are other ways. Why throw the baby out with the bathwater? Bitcoin has achieved so much. Can we continue to build in this direction top of it?
I mean, if you're going to say what that direction is, you're basically getting into the concept of DeFi, right? Because if I'm going to automate the...
in a better way.
Yeah. I mean...
I'm talking about like enforceable contractual relationships that are automated
and verifiable and transparent. You're describing some form of a smart contract. So like the ultimate form of your Bitcoin bank is effectively building it on what looks like a smart contract protocol, which should be then, again, if we're not going to create weird sort of issues of trust and having different risks in different systems, it should intentionally be built upon the system that the money is based off. So if you're going to have a finance system, you should have it accessible and have the same security and decentralization characteristics as the base monetary system. And in my world, what that means is you want something that's Bitcoin-like. You want something that sort of has UTXOs that are potentially more fungible, that can operate as a medium of exchange and unit of account. But you also want to couple that with a smart contracting-like system that allows you to build the financial layers and to think that you can do one or the other, right? So like store of value really goes into finance, unit of account and medium of exchange sort of goes into money. If you build one of these two systems without letting them be intrinsically coupled in the same system, I think you fail in the same way. So if we said Bitcoin is the finance layer, then we fail making the money. If we rethought out a system and we said we can sort of create a token that has consistent purchasing power over time, and it's just a money system, but we don't have a store of value system, we don't have a smart contracting system, we don't have a finance system, you're going to fail in the opposite way. Meaning to do that, you're going to have to go to intermediaries again, and you're going to re-centralize the money to make finance. Or you have decentralized finance, and you have to re-centralize it to make money. So I guess in my viewpoint, to like get this all to work, you fundamentally have to have both the money part and the monetary base part in the same system, and they have to be interoperable with each other, ideally on the same consensus mechanism with the same trusted characteristics.
Yeah, I hear that. I mean, everything above like a commodity, natural resources, things is based in our society like law and contract. That's like how we scale. Like people talk about scaling and they think about technologies, but just like technical technologies and atoms and bits. But these are like social and institutional technologies, law and contracts. That's what all of this is based on, our societies, our democracies, and all of finance. Like a bank doesn't exist except for that it has a contractual relationship with its customers, and then a government or jurisdiction in which it operates or its customers reside have certain parameters around that. And that's true. That's like a scaling mechanism. And so from my perspective is everything here, you're talking about law and contract. That's why, some of Nick Szabo's talk when he was trying to go from BitGold to Bitcoin and so on, he talked about smart contract with bearer and understood this world of like, hey, can we automate, we have like a form of gold or commodity money. Can we then create this law and smart contractual system digitally and then in a more trust minimized way? And so, right, you're suggesting, I'm suggesting, well, Bitcoin's already got this like part here, the commodity money and value, or
I would actually say it's the store of value part.
Right.
It's the monetary base part.
And then on top of that, can we try to move forward on all these shortcomings that we just described in terms of trust in intermediaries and like ways that it can be exploited and agency principal agency problems and so on and so forth. And maybe there's prospects there for smart contracts that are done in a better way than DeFi is today, that are more auditable, readable, automated, and trust minimized. Now, the question is, right, your viewpoint, I think, that like you fundamentally cannot do that. And not to put words in your mouth, but I think you're saying you fundamentally cannot do that in a satisfactory way without having it be more than just interoperable via atomic swaps or something else. It needs to be fundamentally and like natively connected or part of the money itself. Is that what you're, is that a way, like recharacterization of what you're saying?
Yeah. So if we think about sort of the piecemeal concept where we have sort of like Bitcoin over here, and then we get like drive chains. How do drive chains work? Right. Federated pegs. So the federated peg is just a centralized entity, and we're just talking about the number of people that have to sign off to like make something happen. And you're basically going from a proof of work into proof of stake or proof of authority system based off that federation. It's just centralization again. If we're talking about like branching these things across, you might say, okay, we could do a proof of work to a proof of stake system, but like work and stake are really fundamentally incompatible because stake sort of suffers these problems of you don't have economic finality. You sort of have social finality because to reverse a transaction in a proof of stake ledger, it's only the social coordination cost of recreating the signatures. The signatures themselves are effectively free to make. But in a work-based system, to reverse a transaction, you have to rebuild a ledger at depth, which is very costly. So if I'm to try to couple these two systems, like how do I couple this economic system with the social system and do so in a way that if one goes forward, one goes back, or they sort of are interoperably coordinated? So one thing that proposal to do this is you can use a process of merge mining to get this done, where you have chains that sort of have different properties, but they're operating on a similar, if not identical, consensus mechanism, i.e. work. So there's actually a couple ways you could do this in Bitcoin, but there are issues with economic design, and there's technical issues about sort of availability of opcodes to make a merge mine system really work. I think BIP 300 actually talked about this quite a bit, and there's been a sort of resurgence
there has been
in interest. And it's not a terrible idea. The thing that they're really missing to make it work, besides the fact that it wasn't economically designed into the original Bitcoin system, is what I like to call a concept of reciprocal validation, meaning if one of these sort of side chain blocks is built, that Bitcoin is also sort of attesting to the validity of that commitment. Mm-hmm. And if that is a bad commitment, Bitcoin will also be rolled back because of it. So with BIP 300, they're saying, okay, we can sort of create this side chain that's going to make sort of periodic commitments to Bitcoin. But the problem is the consensus and the validation is completely dependent on the side chain, and Bitcoin doesn't really know about it. So we get closer to having a coupled system, but because you don't have the property of reciprocal validation, you're never going to get to like a purely coupled system where you can have an extension of this money system into, or store value system really, into a money system or a finance system.
Yeah. So you talk like the purely coupled. Let me give the uncharitable framing, if I might, of one version of your view. Like I started this conversation of being the resident Bitcoin maxi, right, which is associated with like kind of like a zealotry or like puritanical like focus, purity test and things like that. I almost think like some of what you're proposing might sound like a purity test. If it's not 100% decentralized, trustless, native, integrated, it's not worth doing. But we make compromises like that all the time. That's how our society works. That's how families work, at a fundamental level. But that's how the country worked. We all got together and said, we want to come together and we're going to cede some of our personal like control or rights over certain things for the kind of security of, hey, this country is going to protect other of our personal liberties. That's like what America did, right? We sat around, we said, hey, like, we're all going to say, federal government, you can do this stuff. Everything else is reserved to the states and the people, but like your main job is to preserve these certain like liberties and values that all of us agree on. And it's a compromise. It's a contractual, fundamentally law is a contractual thing. And so why can't we have this Bitcoin and then have groups of people at different scales, from a family to a friend group, to a county, to a state, to a nation state, to the world, and have different security mechanisms and different levels of trustlessness or trust minimizedness and things like that? Why can't we have that approach there? Why does it all have to be in one system?
So that's
the uncharitable view,
Yeah, sure. I mean, there's obviously a lot of complexity that's associated with that. And then there's just different sort of characteristics and security guarantees in each level. And I don't think you're necessarily doing it by design, but you're doing it by necessity of not being able to have one system that can be homogeneous and scale to serve all needs at all levels. So in the money system, the best form of money is the money really I don't have to think about, right? If I have it, I have it. If I want to spend it, I can spend it. I don't need to worry about if I'm in the same system as you. I can send it to you. I can send it to Raleigh. I don't really need to think about that, right? But then if you create this layered approach, then it's all of a sudden it's like, oh, you have USDC on Arbitrum. Oh, I only have like USDC on Optimism. Like, will you take? Oh, well, who's going to pay the fee to go from like one to the other?
Bridged Axelar USDC over here versus the native USDC. Yeah,
right. So that's one problem with it. And then the other problem that I see is, for like money, the thing that actually gives money value is its utility and its future expected value, as like an ethereal concept of money, not commodity money, but just money. Like that's what gives it value. Commodities can function as money, but technically commodities aren't the best form of money because they potentially have alternate uses. And so in the context that something can exist that's not that, it will make a better form of money. If I can make a scaled, homogeneous system where I have the same security guarantees, I have the same fees, and I have the same like low degree of complexity, that will have better utility and better future expected value. So if that is technically possible, that will be the system that ultimately wins out, regardless of the current state of affairs or the desire to have this smorgasbord of a layer cake set up. If you can make that system will succeed in long-term equilibrium because it's offering the greatest utility for the greatest number of people for the lowest cost. So like that's one of the things that Bitcoin has to recognize, is that its advantage of being first mover only takes it so far. If I said I can make a system that's 10% better than Bitcoin, no one would care because its network effect far outdoes a 10% efficiency. What if I said it's 10 times better? What if I said it's 100 times better, right? At some point, the network effect is no longer meaningful because the difference in utility is so great. And like, that's fundamentally what I see, right? So, I know we've been dancing around it, but like there's a solution that exists where you can take the best parts of Bitcoin and you can make a hierarchically merge mine system that preserves the decentralization guarantees, but allows it to scale to money. It allows you to create an endogenous token that can act as a unit of account and a medium of exchange, and also have that coupled with a financial system that's completely independent. And then the other thing too is we say that will be the dominant form, but it also is almost required to win. Because if we're going to displace nation states from this game, nation states at some point are going to actively fight the system. And the only way that you win is to become economically expensive to fight relative to the cost of executing a flight. And for that to happen, we need to be everything. You need to be finance. You need to be a unit of account. You need to be a medium of exchange, and you need to be a store of value. And you need to generate immense revenues to make it expensive to attack the system and attack those use cases. And if you don't do that, you don't have a prayer of standing up against any of the incumbents in the fiat system.
Mm-hmm. Yeah, no, so this maybe comes back to another areas where we agree upon, and I think it's challenging when you use words like better, scalable, these things, decentralized, that can be kind of nebulous and wishy-washy. I was struck by, like back in the day, like the Nick Szabo, like idea of social scalability and the point of money when you're talking about utility. And you're talking about utility from both a micro and a macro perspective. Money should scale to allow the greatest number of people, types of people, the number and types of people, groups, transactions, relationships to be facilitated.
Mm-hmm.
Like that's the social scalability. And the argument for Bitcoin is it is simple and non-complex, and as a result, fair to like the greatest number of those things that should be encoded above the chain, above that level of the chain, right? However, I do agree that like there are challenges technically in some of the other like more traditional views of what scalability and Bitcoin's limitations are, but only to the extent that they frustrate that goal. So that's kind of like my North Star. It's like, that's the point of money. But you're right, there are things with Bitcoin. I mean, ultimately, like you say, if you're only doing 5 TPS or like the fees are so expensive that like it's not practical for me to self-custody under $100,000, right? Like that frustrates the social scalability because not everyone can hold it or use it to preserve purchasing power as collateral, as an accepted medium. So like, yes, that frustrates it. But I think it's like a lot of this, the industry today, like uses these wishy-washy words about scalability, decentralized, and so like, I find it clarifying to say like the point of money is to scale the greatest number and types of people, transactions, and relationships that can be facilitated as effectively and efficiently as possible, and increase that surface space.
Well. So there's actually another interesting thing that like opens up when you start thinking about the social aspect of it, which is at its very base, right? We started this talking about the economic finality and economic immutability of a transaction, and work-based systems creating sort of these economic finality guarantees. When we think about an attacker and we think about attacker resilience in purely an economic format, we're basically saying, if we can have $1 billion a day worth of sort of security going into the chain, to sort of efficiently produce that, we need 100 billion, hundreds of billions of dollars worth of activity. And $1 billion a day is like really kind of the lowest end of the threshold that even becomes moderately expensive for like the U.S. government to take down from an economic standpoint.
Yeah.
It's like the low end,
Yeah.
right? So you have to figure out, how do I get trillions of dollars of activity? How do I get enough fees in that system to make it economically as resilient as possible? Now, the other thing that sort of opens up here is the social resilience, right? And if this system is used by 1 million people as a speculative asset that they can YOLO into BlackRock for, attacks on that system, censorship on that system, changes to that system are relatively easy in a political world because you're only pissing off 1 million people. You're not pissing off your voting base, so like you can still maintain sort of control and electability. But if you create a system that's used transactionally, and suddenly you're buying groceries with it, your mom's, going and filling her gas tank up with it. Suddenly, if you attack that system, you're attacking the economy, you're attacking your voting base. So the more people that you have using it every day in a meaningful way creates social resilience. And without that social resilience, you're never going to win this fight.
Mm-hmm. Yeah, and so this fight, that's like a good thing to like hone in here, and maybe like where we could it could be a nice bow end. Make no mistake about it, and people dance around this, and some of like the commentary, not the Bitcoin and the broader cryptocurrency or quote unquote blockchain industry is fundamentally revolutionary. Fundamentally.
Yeah, I agree with that 100%.
Fundamentally. Make no mistake about it. When you're talking about the adversary being a nation state level type adversarial resilience, that's important for various reasons, but most fundamentally, that this is at its core a revolutionary paradigm shift in technology that is challenging the power centers of the existing global world, which at the top level is the nation state and then at times corporations. And we saw that with the internet, right? But at that time, it was just sharing information. And so it was kind of a thing that the government could also use to its advantage for misinformation. And the media companies got eaten up, but they still exist. But the government had the same benefit, or the nation state had the same benefit of being able to like use the internet in the same way it could use broadcast medium. This may be a little fundamentally different. And that's why we're talking about this kind of nation state level adversarial resilience. So we agree here as well that when we're talking about designing a system for the future, that is the bar. It is not that it does something. It's not an app. It's not an app. It's not DoorDash. It's not TikTok.
Yeah.
It's not.
Well, so let's dig into that though. So if that's our adversary, like that tells you something about the design parameters, right? If I'm going to achieve both economic attacker resilience and social attacker resilience, that means that I need as many people using this as much as possible in commerce as much as possible, right? So to do that, I need scale, right? I need low fees. I need high throughput. And then, basic macroeconomics would tell us that I want, supply to always match demand. And if I do that, right, I can create a fee structure that creates the greatest economic surplus for all parties involved and maximizes revenue to the security of the chain, right? So I need a fee system that is based off demand and is always matching demand, not one that is arbitrarily constrained by technological issues. So if I can answer the technological questions, I can create the economically optimal fee structure, which will then generate the greatest amount of revenue for security for the chain, which will give whatever this is the best shot of exceeding against economically powerful adversaries, right? And then as many people are using it as possible in the most number of places possible for the most amount of lively life activities, you maximize the social resilience. So what it's telling you is that you need to answer the technological problems of scale. You need to answer the question of how do I get a unit of account into the system such that it can also function as a medium of exchange while still fundamentally acting as a store of value, much like Bitcoin. And with those three things in the system added to scale, that is how you get a system that can achieve the goal of actually challenging the existing power centers. Because right now, I think they're laughing at us. They look at Bitcoin and they're like, sweet, we already got that. Like BlackRock's going to take care of it for us. We're going to LBMA this thing just like we did gold. I don't even think they're sweating even a tiny little bit about it. You have something like proof of stake Ethereum. They're like, we can come in. There's 3 validators to that: Kraken, Coinbase, and Lido. Right, these guys are all making money. They want access to the current fiat system. That's their fundamental business model. Okay, OFAC compliance now, guys. Every block has to be OFAC compliant. You build a non-OFAC compliant block, you're out, right? Suddenly the whole chain is going to be the plaything of Janet Yellen. It already is the plaything of Janet Yellen. We just haven't realized that yet, right? So, like, they're laughing at us fundamentally. Like, the government and the powers that be are not worried about Bitcoin as a system as it technologically exists today. They have already figured out how to castrate it and put it into their control, fundamentally because of its technological insufficiencies. So if we can answer the technological insufficiencies and we can make a system that should ideally only be constrained by the physics, that is our best hope of winning this.
Yeah. So I think we also may disagree here about the they and how you and I differ in what we define Bitcoin, its objective, success as, and what the system is for. Similarly to they in America, because from my perspective, Bitcoin cryptocurrency is as American as apple pie. It is a fundamentally liberal, capital L technology like the internet. We want this. It is the liberty-preserving medium for the people, by the people. It is the new America. So in my viewpoint, this is America. This is the new American Revolution, Declaration of Independence. And in fact, they, as I define they in America, they want this. We want this as the ideals that are embodied in the formation of this country and the capital L.
I guess we'll do a different L. I think it's a libertarian movement, liberal, classical liberal, maybe.
Those are the same L. Those are the same L.
Whatever L's those are.
Those are the same.
And fundamentally, like, it is an American idea, right? I think just America has strayed, and it was a gradual process. If you go back to sort of the founding of the Federal Reserve, the creation of the income tax at the same time, and we've kind of gone off the rails over the last 100 years. And, I think the ideas of, cherishing the individual, and cooperating when you need to, voluntarily, like, was the fundamental sort of ideals of the American experiment, as embodied by, the Constitution and the original sort of Bill of Rights.
And I view that as like, yes, but it's also like, because that's valuable, not just because like it's a principle of like us as individuals, or whether
it's economically valuable.
That's right. So economically valuable because like you don't have a central decision maker about resource allocation, about what is or isn't allowed. You're allowed to experiment. You can facilitate a long tail of ideas, of exploration, of it, and
it's laissez-faire, right?
That's right.
It's like laissez-faire economics, and the that stems from this concept of sort of giving the individual autonomy in some ways.
And I don't view us as like having fallen off like what happened in 1971, or like what happened on like whatever, like Jekyll's Island, or like these ideas that we've been in an American decline.
What about 6102?
There are things that have happened that have been not good, but it's not a straight linear decline. It's a cycle. It's so over, we're so back. And I think that with cryptocurrency, we're so back.
Well, so I am hopeful, and if somebody says that I am a pessimist, they have never built anything before, because to build something this complex over this period of time, you have to be an optimist, and you have to be just an absolutely unbounded, insane optimist.
Mm-hmm.
And in some ways, like, I am an optimist, but I'm also reacting to like what I'm seeing, right? So I'm not as sort of optimistic as like where we are in this cycle. And the thing that sort of really makes it different in some ways is that we've never had the same technological infrastructure and information systems, and how we are currently using those systems does not look good for the autonomy of the individual.
Not only that, but for the success of the system as a whole.
Oh, absolutely.
Shooting ourselves in the foot. You and I agree about a lot of these things.
Yeah. So but the question is, like, ultimately we know these systems fail. Like, with enough time, like, they will fail.
Mm-hmm.
Right? Communism has been tried so many times, and like it always fails, right? But man, it's a brutal 20, 30 years till it does, right? So like, do we want to go down this Orwellian dystopian surveillance state where everything is listened to, everything is metered, we have social credit scores, our money is controlled? So like, you bought too much meat last week, David. We just took that money out of your account because you're no longer socially accredited to spend
my
it,
social
right?
credits have been deducted.
Right. And so that's the fear that I have, because like, if you look at the thing that happened after 9/11 and the FISA courts and the NSA, like, we took like a hell of a left turn in terms of what exists, and it's just these technologies are so damn powerful, and they're being abused just like so much, right? I mean, the concept of misinformation Like, what is that? And then the concept of government censoring that, or then even more recently creating malinformation, meaning something that is true, but something they don't politically like, and then censoring that again. I mean, that is some crazy shit, man. So like, how do we go from having malinformation exist as a word that's known in the lexicon and taught to school children to like going back to that concept of the original ideals of the Constitution? There has to be a shock to this system. And I think this is the only thing, like cryptocurrency, that is truly designed in a decentralized way and ubiquitously adopted in mass. It's the only thing powerful enough to do it. And if we fail at this, like there is no farm far enough away, there is no bunker that is like deep enough in the world that you will be able to escape the ensuing chaos that exists.
Yeah. Look, I mean, I don't know what will happen in certain cycles and whether we have to hit rock bottom or whatever else. And
I'm hoping we avoid that.
But I will tell you this, like Bitcoin, like politics, the government is downstream of people and of technology. Fundamentally, it exists because of people, and it is downstream of our systems and our technologies and tools. Fundamentally, always has been, always will be. And so what I see is Bitcoin, cryptocurrency, and these sorts of systems are inevitable. They will happen. We will get there. What sort of suffering or kind of troughs happen along the way, up for debate. And I don't know whether I'm pessimistic or optimistic on that, but like, that's where we're going. America in cyberspace.
Yeah, I mean, I ideally I agree with you. I think it's interesting. You say technology, and it's really power, though, isn't it?
Well,
it drives the thing. If it's power of money, if it's the power of propaganda, if it's the power of technology, if it's
that is
power
what tools are.
Those things.
Man getting power over the environment and our way of life.
Well, but
it's all tools and technology is.
Potentially, but it's also getting power over other men, right? And so the problem again that like what we're really trying to do here, if we sort of like pull the thread in the conversation, is like you give people power, power will corrupt. And so what we're saying is like we want a voluntary system that nobody controls.
Absolutely. We check power corrupts, no doubt. Not all power. You want to empower the individuals. Both you and I agree.
Yeah.
Empower, sure. And technology gives more power to people. But you're right. It also can be a concentrating force.
It can easily corrupt, right? Like money corrupts, politics corrupts, power corrupts. So like what we're trying to do is we're trying to say like let's create a coordinating system where nobody has power.
Yeah.
Like that's literally what we're trying to do. We're trying to make something that nobody in the world can mutate or change, but everybody can use.
Yeah, look,
everybody has free access to it, right?
We're not going to solve the philosophies of like Hegel and like Foucault here. Like that's what we're talking about is like fundamental subjugation of like ids and identities and peoples and power dynamics. Like we're not gonna, those exist, and we'll leave it up to the philosophers to like claim and talk about those.
Well, but
yes, like
I don't even think that there's
better welfare. Everyone wants to live life in the way they see fit and what's best for them and the people that they love.
Yeah, well, and just to be clear, I don't even think like hierarchies are bad, and I don't even think communism is bad. It's just the scales that you're talking about. Like,
communism.
If you hold on, let me make my point before you dig into it.
Never thought I'd see Carl say communism isn't bad.
No, hold on. It's the imposition of it being voluntary or not. So like in a family unit, if you are not a communist, like you're kind of a sociopath, right? And then like when you get to like a slightly bigger unit, say like a company or a church or like a social group, if you're not a socialist, you're probably a little bit of a sociopath. But if you're a communist at a scale of society, you are a sociopath, my friend. Like that is where laissez-faire capitalism comes in, because it's such a big group that like you've removed the voluntary aspect of it. So like as long as it's a voluntary thing, like methods of organizations and sharing and profit and to each their requirements, not their ability, all of that's fine. It's just the optionality, right? And it actually like manifests. So like in my household, like, we're communists, like straight up, right? But then you get to the social bigger spheres and then like in the organization we're not strict capitalists, we're a little bit socialist here because like not everyone like pulls their weight every week or like somebody gets sick and we deal with that, right? Like we give them some leeway.
We want to. It's good.
We want to. It's good because
to a
like
level.
you know we're
Just like in the
cooperating
family.
and like we have empathy, right? But it's a little less than it is in the family.
Yeah, voluntary.
Right?
It all comes down to contracts.
It's voluntary. It's everybody
Contracts.
should have a choice before like they are forced to do something. And as long as there's a choice in the system, like everything's fine. I have no moral judgment if everybody wants to like strip off their clothes, run around naked in a field of like 700 hippies doing communism together, like whatever, like to each their own. It's just, I don't necessarily have to be forced into that group. So as long as I'm not forced into that group, like have fun, guys. Right. You know, so like all of these things like have their place, but it's just it fundamentally comes back down to choice. And as long as everybody's making the choice voluntarily, then like everything is fine.
Yeah, you're talking about the ideas of voice and exit as they're commonly phrased by folks like Balaji and like folks talking about the network state and the internet and systems and social structures as a whole.
That's also an intrinsic property of proof of work. Proof of work, because it has this intrinsic property built into choice. So if we decide like that there's like a better way to do it, you can fork the system, and then you can advocate for your position, and you're like in the forks, but like you can naturally leave both forks because you're sort of carried with it. So there's this natural like passive voting mechanism that takes place when like the system wants to bifurcate or somebody wants to have a new proposal. So like that's the beauty of the system, is that it naturally always preserves choice. And like that's one of the beauties like in proof of work that I don't think people really realize, which isn't necessarily available to you in a stake-based system. But like that's really like everything that you're trying to preserve is choice.
Choice and an exploration and flexibility in the right ways, in a scalable way.
That's not a flaw.
No, 100%.
It's so like being a maximalist and like thinking forks aren't supposed to be there. Like it's a stunted mindset. Right? The crypto systems themselves are meant to be anti-fragile evolutionary systems. The reason they are open source, the reason that you say, I'm going to do all of this work and I'm going to give it to everybody as a common good, is because you're saying, I don't necessarily have the perfect answer. I can't necessarily foresee everyone. And this is available to all of you to try and make it better.
Yep.
Right. So like if you think about cryptocurrencies, like that's the first system of this objective coordination mechanism that also has an inbuilt evolutionary mechanism.
That's right.
Right. And as long as you're using open source licenses, like you are participating in that evolutionary process.
Right.
Right. And like if we can all do it together and we can figure out the technical barriers, I think we can make a money system that re-empowers the individual.
Yeah, I mean, any good system, whether it's systems in nature, complex systems, social systems, anti-fragility, distributed nature, things like this, kind of like spreading information, sharing information, but also spreading choice, is like the fundamental success traits.
Yeah, I mean, it's how like we got here, right? Like how we made it up from the monkeys, right?
Yeah, and the people, I see so many people, try to like dictate this is a better system, right? Without building those in. Like in my view, without those things built in, like it's not a good system. It's just you imposing ideas or will, or I guess like pushing your ideas or will, or thinking you know better. And that's like the key thing about a good system is knowing you don't know better. That's the key thing about like everything. Everything.
Yeah.
Yeah. Right. Yeah. People who I think like don't have that perspective, I think fundamentally don't like people or themselves.
Well, it's not even that though. It's insecurity. Right. Like I'll be honest with you. I didn't understand how to learn until I went to get my PhD, because I was just smart enough that most of the time I could immediately understand something or fake it, right? But I didn't like the process of actually learning is like calming yourself enough and having enough humility to be like, I do not understand what is being said to me.
Yeah.
I need to go and I need to read this again. I need to go and I need to seek out help and get a different explanation and say, I don't understand this. And only once you do that can you actually learn anything.
Yeah.
Right, is to say that you fundamentally do not understand what is going on and figure out a way to try to understand it. If that's asking for help, that's asking for other people. But like until like you just like get the humility. And I'm an engineer. I'm a physicist, right? So it's like your job is to try to deal with very complex systems and tame like complex systems. And the way that you get yourself in trouble the most is by saying that you understand something that you can't back up.
Right.
And falling into cognitive traps of, I think I understand this, but being incorrect. Right. So you always have to be highly flexible with your ideas given new sets of information. But the one thing that you'll learn if you get good as an engineer or as a scientist is you have to have the humility to say that you don't understand and you don't necessarily know the answer. And only once you do that, you have a prayer of describing or controlling complex physical systems.
And also understanding things from a systems perspective, or like a metaphysical existential level. It's actually one reason. So I think another good foundation for understanding crypto is law. Like I went to law school, and having like studied physics and political economy undergrad, but lawyers, and not like, people think of lawyers, they think of like people in the administrative state, or, like torts and personal injury or divorce, but like setting up the system and rule of law from like, Hammurabi to the Magna Carta to like the U.S. civil code and common law systems and things like that. These were like genius level, like metaphysical people that set this up, and you can't understand things until you learn how to structure and think about the system as a whole, but also understand like the limits of the design of the system.
So you
don't have like the quantitative, like scientific method based stuff that you do in like harder engineering sciences, but a lot of the metaphysics is the same in law.
But
you're setting up systems.
The similitude here is that well-designed systems are very simple in their rules and complex in their emergent behavior.
That's right.
Right? And the way that you get good sets of rules,
common law is better than civil law.
Right. And the way that you get good rules is by saying, I don't know the answers to all these questions, so I will create the loosest like set of rules and definitions that I think will give rise to good outcomes emergently.
That's right.
Right? And that's true for how you design a blockchain system. It's true for how you write a good constitution. It's true for how you set up any system, because the more rigid the system is, the more fragile it is.
That's right.
And the less it's able to evolve and change. So you want like the most basic, set of rules. And it's really interesting in, the system we're designing is it is actually very, very, very difficult to like come down to the most fundamental rule. But there's technically one rule here in the entirety of this design, Quai Network, which is entropy. And like that is the governing rule, and everything emerges from just the conceptual understanding of entropy in the system. But it was very, very hard to get to that understanding. But like once we have it, you can just have this single rule that creates a million branches of emerging complexity that give good economic outcomes in a laissez-faire like system.
Yeah, that's right. Yeah, I mean, and when I'm saying civil law, I'm talking about a rules-based system where everything is by statute. Like every rule is written down, and then a new edge case comes out, you have to write a rule about it. Another one, you write a rule about it. Something like doesn't work out, your common law is when you have case law and can have an emergent properties in different circuits and say, well, we're going to interpret this fact pattern under the like loose statutes we have in this way. And then we can debate in that way.
Stack's interpretation gets a little nasty.
Yeah. And then same thing with the Constitution, where we said, hey, look, we're going to have these like fundamental, like different hierarchy of laws that are like harder to change. And then these ones that are easier to change. And then we have case law. And so you kind of see this system where it's, yes, like emergent behaviors and properties, but also flexibility for allowing long tail behaviors and outcomes to play out without breaking, which is the anti-fragile nature.
Right. Well, and I would think actually there's an apropos analogy here with the SEC. If we want to like dive into that hole in terms of like are they applying things in sort of an overly broad way or a hyper specific way? Is case law given too much Yeah, maybe that's too complicated.
Yeah, well, the one thing I'll say,
to jump into.
I mean, like, there's a broader regulatory question on how much power regulatory bodies should have versus like Congress versus different branches of government. That we'd say that for another day.
But I think the point is over reliance on specific statute rather than intent is where you get bad outcomes. So the more you can sort of manifest intent in design, the better your outcomes are going to be, because the more flexible they can be to sort of optimize the system.
Yeah, and speaking of like the SEC and kind of the current state of crypto events, like I think there's certainly with like Bitcoin maxis or OGs or like crypto purists, there's kind of like this distaste or dislike for a lot of what's happening in the current crypto environment. I don't actually know where you fall on everything, but I guess like maybe I suspect where you might. And I find myself opposite, because I do characterize myself in many ways as like a Bitcoin maxi or an OG or like whatever purist in these fundamental ideas we've been talking about. But like I have no problem, even maybe love like meme coin mania and these other things like that. At a minimum, like it is allowing different emergent behaviors in a different way that could be good, could be bad, who knows, but is also kind of rooted in this kind of like countercultural, like, protest style votes of different people who may or may not be enfranchised. And you're seeing grassroots movements, whether it's an FU, whether it's nihilism, whatever it may be, it's allowing that to happen. That could have never happened before. It's allowing an economic coordination game amongst people. And whether it's around a dog or a cat or whatever, we could debate whether that's good. But this kind of like schools of fish, flock of birds, emergent properties, and coordinating economic behavior has never happened before.
Yeah, I mean, like I say, I don't try to impose moral judgments on things. I personally don't partake in the mimetic side of this world too much. At least not the financial mimeticism. I certainly like a good meme here and there.
We might need it, right? I mean, like, not to get to like the like narrative, human history is narratives. What is it? Yuval Harari or whatever his name is. But like, we need memes. The American and like liberalism and the French Revolution and America, like these memes of like liberty, don't tread on me, liberty or death, come and take it. Like, these are powerful.
Yeah, no, I
think we need more of that in crypto. And maybe if we could channel it, and I think meme coins do channel it as kind of like an FU or nihilist thing, but there's also like versions in Bitcoin, right? Not your keys, not your coin, you mentioned, and like some of these other things. And so if we could push more of that meme stuff, I think we are, but like it's not coming together just yet. But you need that. And I think like you're going to see that like a lot of the American Revolution and exceptionalism came around these narratives and soft social power that we had. And so I think you're going to see that with Bitcoin and memes coming together and actually joining forces.
Yeah, no, I mean, to your point, I think it's a powerful tool. It was actually interesting. I think one of the most powerful things that like Bitcoin did is it was this sort of economically incentivized spreading of an idea in a relatively esoteric like landscape. But it rewarded those who understood it, and it also rewarded those who then further communicated that idea, which is the origin of the word meme, right? It's gene, and what's the portmanteau?
Mimicry.
Yeah, it's mimicry and gene.
Yeah, maybe.
So yeah, that's right. Is
mimicry
meme. Yeah,
but it's actually I think it was defined originally as like a unit of like a cult, like it was like actually a unit. A meme, I think, check me on this, but like I think it was defined originally as like a unit of cultural value. Is I think how it was defined originally.
But it's an interesting mechanism of disseminating an idea, and right with the communication systems we have, we can sort of disseminate ideas from many places organically. And Bitcoin kind of has the first sort of financial incentivization mechanism to disseminate an idea, which is probably one of its greatest contributions.
Memes and fractals, you see those in nature. That's how nature replicates and reproduces. Never fight a fractal. I'm telling you, like that reproduction, same as memes, same as you see in natural systems as a whole. And that's what we're doing here. Like we're building a fractal. of social and economic value and institutional capital. And so that's like how I see that. Why I'm such an optimist. It's like, sure, try to fight it, but like you can't. This thing is reproducing at an incredible uncontained rate.
Yeah. No, I think all we got to do is empower people with tools that are less limiting, and then we can empower a greater set of people, create greater utility and franchise a greater set of people. And with that, they'll see benefit and they'll effectively become advocates, for the system that, they get real value and utility out of. And that's really what our goal in crypto should ultimately be.
Like, last thing I want to cover before we like break it up, we've been pretty kind of heady, philosophical, macro, systems level. Like, most people who are not you and I don't care about any of this. They don't know about any of this. How do we have to get them to care? Mainstream users, normies, like longer tail people, do we have to get them to care? Or do we just need to Trojan horse them with like apps and things that they will use and incentivize the right behaviors and reactions?
I think ultimately,
how do you see that chasm being crossed?
Yeah, I mean, ultimately what I see is people already have shaky faith in the current institutions, specifically around fiat and fiat issued by nation states. And all you have to do, I think, to win this game is just come up with a technologically sufficient solution to start onboarding those people into a new system. And I think that's like where this starts. And once that starts, this basically comes to an end. So it's not about necessarily getting everyone to see the same ideas, but to build a system that can give a large enough set of people enough utility that it just becomes the obvious choice for how to conduct commerce. And I think that current conditions have set us up well to do that. We still just have to deliver on the sort of technical promise of creating a system that can replace the current system. And once you do that, I think people will flock to it, and it will spread just like a meme.
Yeah. I mean, ultimately, like people talk about the utility or like the apps and da-da-da, but like, I mean, fundamentally, free and open and distributed money and finance is incredibly valuable. And people, I have no doubt, will recognize that, even if they are in fortunate positions, for example, like middle class and above in the U.S. I think increasingly you're seeing people realize the value of that. But we'll see. Whether they maybe it's just memes. Maybe they all want dog coins and that'll get them in. I'm fine with that too.
Fair enough, Ben.